A guy walks into a bank to buy a house. He's excited, ready to sign the paperwork, and then he sees the mortgage rate, 6.5%. So he asks the loan officer, "Why is the rate so high?" The guy smiles and says, "That's just where rates are right now. But here's the crazy part. Your bank didn't really decide that rate, and neither did the Federal Reserve. In fact, there's a massive market most Americans never think about that's quietly influencing your mortgage, your car payment, your credit card interest, your rent, and even your paycheck. It's called the bond market, and it might be the most powerful financial machine on the planet. By the end of this video, you'll understand why investors, banks, CEOs, and even politicians pay attention to bonds every single day. And trust me, once you understand this, you'll never look at money the same way again. Welcome back to Start Investing, the channel where we break down money, investing, and wealth building in plain English. If you're trying to get smarter with your money, make sure you smash that like button, subscribe, and turn on notifications so you never miss our future videos. Now let's talk about the market that secretly controls almost everything. What is a bond? Let's keep this super simple. A bond is basically an IOU. That's it. Someone needs money. Maybe it's the US government. Maybe it's Apple. Maybe it's a giant corporation. Instead of borrowing from a bank, they borrow directly from investors. Here's how it works. You lend them $1,000. In return, they agree to pay you interest every year. Then, when the bond reaches its maturity date, they give you your original $1,000 back. Pretty straightforward, right? Think of it like lending money to a friend. The only difference is your friend is a government or a billion-dollar company. Sounds boring? Yeah, that's what most people think. But here's where things get interesting, because bond prices can move dramatically. And understanding why is the key to understanding how money works. The one rule every investor should know: imagine you buy a bond paying 2% interest. Not exactly exciting. Now let's fast forward 1 year. New bonds are suddenly paying 5%. If you're an investor, which one would you rather buy? The bond paying 2% or the one paying 5%? Pretty obvious. You'd take the 5%. That means fewer people want your old bond. So if you want to sell it, you have to lower the price. And that leads to the most important rule in the bond market. When interest rates go up, bond prices go down. And when interest rates go down, bond prices go up. That's the entire game. One simple rule. But that one rule affects trillions of dollars across the economy. Why should you care? Because this doesn't just affect investors. It affects you. Let's say the yield on the 10-year US Treasury starts climbing. Banks notice immediately. They think, if we can earn more lending money to the government, why would we lend money to consumers for less? No. So what happens? Mortgage rates rise, car loan rates rise, business loans rise, credit card interest rates rise. Suddenly, borrowing money becomes more expensive for everyone. Emailers who our homos businesses slow down hiring, consumption spend less money, and the economy starts cooling off. That's why Wall Street watches bonds like a hawk. The bond market often spots trouble before anyone else. In many cases, bond investors see economic problems coming long before the headlines do. The lesson most people learn the hard way. For years, people thought bonds were completely safe. Then 2022 showed everyone a different story. Interest rates shot higher at one of the fastest speeds in decades, and bond prices dropped hard. A lot of investors were shocked. Retirement accounts took hits, bond funds lost value, and suddenly people realized something important. Safe doesn't mean risk-free. Every investment carries some type of risk. Stocks have risks. Real estate has risks, and yes, bonds have risks too. The smartest investors aren't the ones avoiding risk. They're the ones who actually understand it. So what's the big lesson? A bond is simply a loan. Bond prices move opposite to interest rates. And the bond market influences everything from mortgages and car loans to businesses and the overall economy. You don't need to become a bond expert overnight, but understanding the basics gives you a huge advantage over most people. Because once you understand bonds, you start understanding how money really moves. If you got value from this video, make sure you hit that like button, subscribe to Start Investing, and turn on notifications so every future video lands right in your feed. And drop a comment below. Did you know the bond market was this powerful? Share this video with someone who's trying to get smarter about money. Thanks for watching, and I'll catch you in the next one.